Okay, time to wrap it up for April 22nd. We had ourselves a pretty good day today. Considering what we had to work with, the idea that we might not have a lot of range in the treasuries because of the 2-year auction, but we came into the E-mini today looking for the market to trade higher, and by golly, it did. And at the close of business today, if the market were to close right here at 1875, we'd be looking to buy the 70 to 68 area right here to see if we could extend the range and take it higher. Now, this is the daily time frame. This is the first place that we look. We look for confirmation on the 30-minute time frame, and this is where we sharpen our pencils. And you can see on the 30-minute time frame that I've got very, very strong buying, and it also confirms that we're looking for a place to buy it. If we close this market above 1875 today, new contract highs are within reach. Everybody's been talking about 1900. April statistically is the kindest month of all to be in the stock market. Sure didn't feel like that when it started out, but it does right now. But you can see right now that volume is moving higher in each of these distributions. And we're dealing with nothing but P's, and they have gotten stops above 75. So the next, we got an attractor up here at 80, so the easiest trade to call would be sell failure to extend today's range, so sell failure to take out 78 to 80, and we'll come back in and we'll adjust that in the morning. May not get a move in the overnight. We don't have a lot of news tomorrow. More news on Thursday and Friday. On the buy side, last rotate down stopped at 75, then 73. So we'd like to buy it on the cheap side. So we're going to start out trying to buy 71s to 73s. But we might have to pay up. Just this market does not let you in. And then the second buy zone will be 65, 67, which is where the entrance was today. Don't think we'll make it down to that 65, 67 area. So we can sell failure to extend the range in the overnight session, take it higher, and tomorrow. And we'd like to get long in the 71, 73 area. Might take 75s to get in. See if we can't get through 78 to 80. So structure, volume, everything favors the buy side. Okay, taking a look at the note, tomorrow is the 5-year auction, and if we were going to have a soft auction, it would be on the intermediate term paper. They use that to set up the long end, but we've got a 2, 5, and 7-year auction this week, and that paper is not as difficult to move as the 10 and 30-year papers. So the dealers don't get out there and they don't have to work as hard on moving the paper for the Treasury. We got a lower high and a lower low, but this is countered by the 5-year auction. So we might be a little lower. I'd like to buy into that, and you can see we've got volume down here in this 12 to 16 area. So leaning against this high volume area is the trade that I'd like to put on, but we may find ourselves buying what we did this morning, 17s to 21s. E-mini sells, we're going to have to pay up. If the E-mini rallies and closes strong and is strong in the overnight, we'll be able to buy it on the cheap. Pretty damn simple. The inverse relationship between the two contracts, which is the norm, has returned last fall from August through the end of the year. They both traded the same way based on what the perception was about the Fed's taper on or the Fed's taper off. Okay, we've got a D pattern right here. It means it's balanced, so selling failure to take out 24, 28 is the easiest trade to call. On the buy side, I'm going to try to buy it a little cheaper. We're going to try to do 13s to 17s. But it may take 21s to get in. It just depends on what the E-mini is going to do overnight. And the E-mini is selling a little bit right now, which is where our strength is. Again, the easiest trade to C would be selling failure. to extend the take out the 24-28 area. Hope everybody's had a good day. It's really finally turned to spring here in Wichita, and it's I think we're going to be 75 again today with not a lot of wind, and then they got storms, potential breakout of big thunderstorms here, but most of it looks like it might go east of us tomorrow. It is that time of year. This is the latest tornado season that we've experienced here in the Midwest. Global warming, no doubt. The knob spread with the 30-year expanded a great deal today. Went out at 10 plus 10. And we started out this morning at 10 plus 4, 10 plus 5. So we had a lot of buying in the long end of the market. And part of that is just the way the auction is played. The dealers support the financial market by covering their shorts. And the easiest way to do that is make the 30 years strong. So the knob spread during auction week usually widens. So we're going to make sell 1, 7 to 11, sell 2, 15 to 19, just because of the strength in the knob. And on the buy side, last rotate down was 25. So we're going to make 25 to 29, buy 1. And then 17 to 22 for buy 2. Biggest thing happening tomorrow will be the 5-year auction. We do have some news. New home sales are looking for 450,000. Probably not a market mover. Then they've got crude inventories. And that won't impact our market. It will crude, but not ours. Not this market. Okay, taking a look at gold. Gold got whacked today. There's been a lot of articles coming out about who's selling gold, and it's the institutions. They don't see the opportunities in gold for appreciation that they have seen in the past. So they liquidate, they sell into strength, and that's the seller in gold. The buyer's a retail account, people that are scared about what their governments are doing to their money, or whether their government's going to be in existence or not, who's going to be ruling them next. And so the retail accounts, the buyer, institutions are on the sell side. We haven't seen a lot of central bank intervention. Back last fall, the central banks are the ones that would come in and whack it. Institutions and retail accounts were buying it back in the fall. So looking at this screen, we've got a seller in the 85, 87 area. That'll be sell 1. And then 90, 92 will be sell 2. On the buy side, we've got 75, 78, buy 1. And there is a little bit of support down there at 68 to 70, so we'll make 70 plus or minus buy 2. Can trade from either side, don't have a strong feeling on gold. Not afraid to get long against 75, not afraid to sell the 90s. 85 to 87 is pretty aggressive, but that's what the structure says. 90 to 92 would be a pretty comfortable sell. Okay, crude got whacked today, got hit pretty hard. Tomorrow there's inventories that might bring in some short covering, but that's about the only thing I could see that would support this market right now. Joe Biden spoke this morning in the Ukraine as his remarks came out. I mean, he didn't change the situation, but I think most of the world's kind of sitting back and saying, you know, what does Russia gain by outright annexation or invasion of the Ukraine? They'll gain a heck of a lot, and they make the world more nervous about their status and stature in the world. So Russia probably has done what they needed to do to secure their southeastern flank. Now, that can change. If the Ukrainians come in and blow up gas lines, the whole game's will change. So we got a top here of 102.71. We've got the center $1, so take $1 off of that 101.70, and this would make the ideal buy zone, this low volume area down here. So this market is pointed lower. I think we're going to give it some room to the downside. First, you got to get through 50. If 50 holds, you'll have to pay up on short covering in front of that. But I think we got a chance for them to go for stops below 101. So we're going to try to buy 75 to 101. That's going to be the buy zone. And then if we break that, we're going to look for 100, 100 and a quarter for buy 2. On the sell side, we're at 101.70, so we're going to sell 102, 102 and a quarter. And then 50 to 75. And that does it for crude. So the question mark on crude is going to be what happens in the overnight session at 101.50. If we can't break that, then the market can trade back up off of short covering in front of the EIA inventory numbers tomorrow. Everybody's been scratching their heads about why this market sold. You know, it's built some 16 million barrels over the last 3 weeks. It's seasonals. This is when they build inventory to supply gasoline for summer driving, and you know the economy might actually be gaining some strength. That's what all the economic forecasters say is happening, so that's possible too. So here's the euro. We got a buyer in the 90 area, maybe a little bit lower, so we'll make 80 to 90, buy 1. Buy 2 will make 65 to 75. On the sell side, we're going to make it 15 to 25. And then 40 to 50. There's been a seller above 138.25, and there's been a buyer below 137.90. And I don't imagine that will change. Okay, that's all I have for right now. I'll come back up and get the screens reset. It'll take about 10 minutes to get everything up and posted.